Hello and welcome to Earnings Echo. We put together the most important information about Axon Enterprise.
Let's get right into it.
Right. Let's look straight at Q4 2025. Give me the headline numbers.
It was a standout quarter. We were looking at revenue of $797 million, which is up 39% year over year. On the bottom line, adjusted EPS hit $2.15.
And the forward-looking guidance?
Fiscal year 2026 revenue growth is projected between 27 and 30%.
Contextualize that performance against the street. Was this just a standard beat or?
Massive beat. The consensus estimate for revenue was sitting at approximately $755 million. They cleared that easily. But the earnings story is even more dramatic. The street expected $1.60 per share.
And Axon delivered $2.15?
Exactly. That is roughly a 30% beat on profitability.
A 30% EPS beat usually moves the needle. I saw the stock jumped, approximately 16% immediately following the print?
Roughly 16%, yeah.
But 16% is aggressive for a company of this maturity. I mean, is that move justified purely by Q4 results, or is the market pricing in something else?
It's the classic beat and raise dynamic. The market is reacting to the raised long-term ceiling. Management increased their 2028 revenue target to $6 billion. Investors are repricing the stock based on that long-term visibility and sustained growth trajectory.
Let's drill into the drivers. A 39% revenue surge suggests more than just selling hardware. What is the actual operational engine here?
Mix shift toward high-margin revenue. The software and services segment grew 40% year over year to $343 million.
Which fundamentally changes the margin profile compared to their historical hardware focus.
Correct. This segment is now a massive contributor to the total pie.
But the hardware is still the entry point. Are the physical units actually moving?
Yes, adoption remains very strong for the TASER 10 and Body 4 cameras. These serve as the ecosystem anchor driving those software subscriptions.
You mentioned long-term visibility earlier. Do the bookings actually support that $6 billion 2028 target?
The backlog is arguably the strongest metric in the report. Future contracted bookings rose 43% to a record $14.4 billion.
That provides immense revenue predictability for years to come. With software outpacing hardware, we should see that in the margins. Did the profitability scale?
It did. Adjusted EBITDA for the quarter was $232 million, representing a 29.1% margin. They are aiming for a 28% margin by 2028, so hitting 29% now demonstrates they can balance aggressive growth with profitability.
Geographically, is this still a U.S.-centric story?
Momentum is building internationally, specifically in Europe. Accelerating international adoption diversifies the risk from being solely dependent on U.S. municipal budgets.
Moving to sentiment and call insights, the numbers are good, but what was the tone? Was management cautious about the macro environment?
The tone was described as never been more confident.
Even with inflation risks.
The filings acknowledged standard macro and inflation risks, but on the call, management effectively dismissed major headwinds. They focused entirely on execution and the pipeline.
Huge focus on the AI era plan, too. Is Axon actually monetizing AI, or is this just R&D spend?
Active monetization. They highlighted Draft One, their AI report writing software, as the fastest-selling paid software product in company history.
Which validates the thesis that police departments will pay heavily for efficiency tools that reduce paperwork. Are they strictly a public safety play at this point, or are we seeing expansion?
Early green shoots in the enterprise and retail spaces. Still early, but they are clearly signaling an intent to move beyond just law enforcement verticals. After-hours sentiment was extremely bullish because of this expanded outlook.
Let's wrap with the AI conclusion and outlook. Summarize the investment thesis shift for the listener.
Axon has successfully transitioned from a hardware manufacturer to a software and AI platform.
And what is the echo? What is the critical takeaway for the investor today?
The compound effect of the ecosystem. Hardware plus cloud plus AI creates a widening moat. The record bookings prove that once customers are in, they lock in for the long haul.
Driven by the moonshot mission.
Cutting gun-related deaths between police and the public by 50% by 2033. That objective continues to steer their central R&D roadmap.
Which leaves you wondering if Draft One is their fastest-selling product ever within law enforcement. What happens to their valuation when those AI capabilities fully penetrate the broader enterprise and retail markets?
A completely new, total addressable market.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.